live day trading the S&P 500 index using the Stochastic like a pro. Live day trading the S&P 500 using the Stochastic like a pro. Good morning, good afternoon, good evening, bonjour, bonsoir, mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders, and our website is www.stochastic-magd.com. The title of this video is live day trading the S&P 500 using the Stochastic like a pro. All right, I just want to sell the S&P 500 today at 2098. This is a limit order at 2098. All right here. This is my limit order. Okay, this order is not yet filled. It will be filled when the price drops down below the level of 2098. This is a live day trading the S&P 500 using the Stochastic like a pro. All right. First thing, my friend, why am I selling? All right, that's a very good reason. All right. If you want to sell, the price should be at least at a resistance level, or the price should be below, should break below a support level, all right, or breaks below a bullish trend line, all right. So these are few things we need to find first before we can pretend that we want to sell any financial instrument, all right. So bringing us back to what I've said 100 times, find a trading setup first, validate the trading setup, and then use a top-down trading method. This is what we call the bread and butter of a trading. The trading setup, all right, the validation of the trading setup, and then a top-down trading method. Okay, very simple. For me, I like to keep my trading very simple, very simple. If I don't want to know too much, I want to know only things that are working. That's all I care about. I don't want to know too much. All right, there are so many things we can learn in the financial market. I want to concentrate only on things that work, bringing us back to what I talk about all the time, the market stable data, all right? Things that remain intact in a messy market. All right, talking about market stable data, we are talking about the market patterns, all right? If the price is going up on any time frame, it will be in a rising channel. This is true all the time. So with that, it's good because we don't have to spend too much time looking for something else. So on this 3-minute time frame, where I'm trying to sell, you can see that the price is out of the declining channel as the market opens today, and it's now in a declining channel. So from a rising channel, the price change is now in a declining channel. So this is telling me that the bullish momentum is diminishing on this 3-minute time frame. 3-minute time frame. All right. Now, what is the bigger picture? All right. Talking about a bigger picture, we are talking about multiple time frame trading method. All right. So far as we are talking, this order is not yet filled. All right. It will be filled only if the price reaches this level. Another thing, okay. Before I forget, all right, I say something all the time to traders that be ready to buy and be ready to sell. Okay. Now, some traders may say, Joe, what do you mean by that? All right. Okay. Because the market is dynamic, is changing all the time. So if, for instance, today, for instance, I just want to sell the S&P 500, so I'm focusing to sell, all right? So I just want to sell the S&P 500 because I see a bearish trading setup, all right? Suppose the price is at a resistance level, okay? And I want to sell because the price is at a resistance level. What will happen if the price breaks above that resistance level and finds support? and start displaying high lows, high high. Should I continue to sell? No, I will not sell. It means that, okay, the music has changed and I must now follow the price. But what I'm saying to you now, a lot of traders find that very difficult to adjust to the current market environment. Another thing that I said before, and some traders find it very upsetting when I say that some traders only buy. This is true. Some traders only buy and some traders only sell. What we say to traders, do not get into that mindset, because naturally some traders want to buy all the time. It's crazy. Don't do that, because the market does not go up all the time and it doesn't go down all the time. So if you are selling all the time, you should also try to learn to buy, okay? And if you are buying all the time, you should also learn to sell. And for some traders, it's upsetting when I say something like this, but this is true. Because if you lie to traders and say, it's okay, what you are doing is okay, it's not okay, all right? It's not okay, all right? So, though I want to sell the S&P 500, all right? If the music has changed, all right, who am I to say that, okay, I know better than everybody else, I want to sell, it will definitely go down, and I just want to sell the S&P 500 the whole day. That will be, okay, a wrong decision, okay? All right? Another thing that also happens is that sometimes traders are trading one financial instrument, okay? So it's also a bit of a risk to that. There's an advantage of trading one financial instrument, which means you are a specialist trader for that financial instrument. But there is another thing which I need to clarify to traders, is that when you trade one financial instrument every day, all right, some days there is nothing there. Nothing, no trade. In fact, one should go and do something else instead of trading, because there's nothing there. There's no setup, there's no signal, it's not going to work. So it's better not to trade some days. So if you are trading one financial instrument all the time, just be aware that some days you will have to step aside, which means you are not going to trade. But if you are trading one financial instrument and you are trading every day, you may end up losing, not because, okay, you don't know how to trade, but it's because some days it's pointless to trade. All right? So, because as I'm waiting for this order to be filled, I'm just trying to clarify a few things with traders that do care about their trading account. So they may start making some changes where necessary, okay? All right? Still waiting. So I'm going to show you now my trading setup. I have found a trading setup that is allowing me to sell, to look for an opportunity to sell the S&P 500. Bottom line. Very simple. All right? Let's go to the 2 hours time frame. I'm a bit lazy today, so I just want to stop on a 2 hours time frame. A time frame that we recommend to TSTW24 traders to use the 2 hour time frame instead of the hourly chart. We also recommend to traders, if they can, use the 2 days chart instead of the daily chart. But there is a reason why traders use daily chart. We do use daily chart also, but just know that sometimes we may have some distortion on the daily chart when we are looking for trading setups. All right, I'm removing some lines on my chart, all right, and we're going to continue with our recording. So, what is my trading setup? Okay, on a 2 hours time frame for the S&P 500, I have noticed that my favorite only stochastic that I use, 833, has displayed a bearish divergence. So the stochastic is forming, pay attention to the vertical line, is forming, okay, a lower high at a time when the price is forming a higher low. This is a bearish divergence. So if you want to learn to trade divergence, go to www.stochastic-badi.com, click on divergence, and you will read some article and also a few videos that will help you to improve your divergent trading. The divergence, this bearish divergence on the 2-hour time frame, it is what? A warning. It's not a signal. All right? Telling me that the stochastic 833, in fact, if you are using any technical indicator, you want to know the primary role of that indicator. The primary role of the stochastic indicator is to pinpoint bullish and bearish divergence. That's the ultimate role, or the destiny, all right, or the purpose, or the number one function of the stochastic indicator is not about oversold and overbought, is to pinpoint divergence. And the stochastic 833 is an excellent, setting for the stochastic to pinpoint divergence. But the divergence is not a trading signal, it's a warning. It's warning me that, okay, the price has a high chance to go down, but now I must wait for the price itself to confirm that divergence. If you may have sometimes false divergences, which you may see a bearish divergence, but the price may go up. So if you are ready to buy and ready to sell, you will not get fooled by the stochastic, but you will follow the price, okay? So some traders that are new to us, you may say, Joe, who are you to speak to me like that? I'm an ordinary trader, okay, that do care about traders not to lose, okay? Ordinary trader who care about traders not to dump money in the stock market, okay, wasting their money over the year, because I've done it myself and it's painful. All right, painful. All right, very, very painful. Okay, so still waiting. My order, you see the price coming near my order here. I didn't want to sell it here. I'm waiting for it to come to this level 2098. So my trading setup is a bearish trading setup, or a bearish divergence, stochastic bearish divergence on the 2-hour time frame. So where do we see, so now the next question, where do we see bearish divergence? Well, we may see bearish divergence at the end of an uptrend. We may see bearish divergence at a resistance zone. We may see bearish divergence, okay, in a declining channel, okay. Those are the places where we usually see divergences. So for me, this order is now failed. I'm now in this trade at 2098, selling the S&P 500. Okay, so because this order is now failed, I will place my stop loss, keeping things very simple. The S&P 500 doesn't go fast like the Dow Jones, so I don't want to use too much pips. So you see the high here on my 3-minute time frame. What I will do, because the price sometimes will come back to the prior high, I'm going to change my time frame, going to the 15-minute time frame, and to see whether, now this is the problem I'm having recently, to go above 2111. I'm going to go, let's go to the hourly chart. No room either. Same thing to the hourly time frame. I'm at the top of my 9813. Okay, I'm going to use 15 pips for this trade. My stop loss at 2113. Okay, 15 p 15. Okay. Well, you may not see it here, but I will adjust it. And hold on, please. And I'll color into red. Okay. And I'm going to, the number is 2113. Okay. That's it. Moment, please. That's it. That's my stop loss. You can see now on the daily chart, 2113. That's a 15p. If I go to the 3-minute time frame, you may not see the red line. Just remember, I'm using 15 pips. My stop loss is at 2113. Okay. That's it. So I'm now in this trade and I'm using 15 pips, pressing my stop loss just a little bit above this prior high here. And my order is filled now and the price starts going up, okay? So what is happening, okay? I'm going to go now again to let's go to the daily chart. On the daily chart, last time I was pointing to traders, one level here, at 2-1, okay? You can see I have too many lines because of my entry level. And another turquoise line, can you see the turquoise line? Just a little bit above, okay, the green line, okay? That level is 2101. This is what we call the nuts, okay? The nuts of a double bottom chart pattern is a key resistance level, all right? Hold on, please, traders. Here it is. You see on a weekly chart, you see the price form a double bottom chart pattern here on the weekly chart, and the top of the nut or the neckline of our double bottom chart pattern is at a 2101. So I'm selling, okay, few pips below the nut of this double bottom chart pattern. Now, for a double bottom chart pattern to become completely bullish, the price must break above the neckline, must break above the nut, and find a support above it. You can notice that the S&P 500 went above that level recently up to the level of 2113, which is my stop loss, okay, for the high of this week. But it quickly returned back below the nuts, so indicating to us that there are orders here to sell, okay, the S&P 500. I also recorded a video recently that a trader marked down that what has happened before is also an indication to us, okay, will give us a bit of idea what is likely to take place. So if traders sold a financial instrument at a specific price, that level become a resistance level. If the price goes down from X level before, it means that that level is a resistance level, that if the price return back to the same level, the first thing that is coming to the mind of traders is to sell. But one must now implement a top-down trading method instead of assuming that definitely they will sell. Okay? All right, so I've talked about all this before, and I will not repeat myself again, okay? So we are at a resistance level, and we see at a resistance level, all right, a bearish divergence. Weekly chart, we are at the resistance level. The price went above that resistance, but now it's back below it. And on a 2-hour time frame, we have a bearish divergence right here. Now, my trading setup is on a 2-hour time frame. One may say that I'm validating my trading setup on the weekly chart because the price from a double bottom chart pattern, the price went above the nut, but now it did below the nut. It's a key resistance level, which is 2101. You can see that's the nut here, the turquoise line that I've been talking about. So you may say that I use the weekly chart for the validation of my trading setup. The warning is still here, nothing has changed. Now I go to the 3-minute time frame to enter my trade. I just like to trade. I like the 3-minute time frame. I enter the trade most of the time on the 3-minute time frame, 5-minute time frame. Okay, depending on what I'm trying to do. Okay, all right, very simple. So about trading, this is what traders are doing all the time. Set out, find a valid trading setup, validate the trading setup. Okay. And then implement a top-down trading method. You want to sell at a resistance level or below a support level. You want to buy at a support level or above a resistance level. So that's why we say be ready to buy and be ready to sell. So if the price return back above the nuts, okay, right here, and start displaying high, low, high, I will close this trade without blinking, and I may be willing to buy. But right now, I'm not willing to buy, which means if the price starts going up and I don't want to buy, I may step aside, which means I will not trade it, okay? Because of the warning there, I may decide to ignore, okay, the bullish progression. There are other things going on here. We can talk about it another time, but I'll just keep it to the point. Because this is a live recording, okay? On the 21st of April 2016, the time in London is 55 minutes past 2 p.m. In New York, 55 minutes past 9 a.m. Talking about live day trading, the S&P 500, using the stochastic like a pro. All right? Okay, so we are on this trade. We set our stop loss. So let's go now to the 2-hour time frame and see whether we can set, a greedy target. It's good to get paid. This is what I care about. If you are doing anything and you don't get paid, well, unless it's a charity, that's fine, all right? Or you are doing it for free, which is great, okay? Sometimes people do things for free. But if you are doing it to get paid, you want to make sure that you get paid. If you are losing, all right? If you are losing, stop, all right? Stop. Then go to use a demo account, practice. Traders very often in their lifetime will have at one point to stop trading, which means you go away, do something else, think of it, all right, because if you are losing all the time, accumulating losses, come out, go back to the drawing board. If there is a system or a method or a strategy that you have been using before that is working, this is what you need to focus on. Is that focus? I think there is no success. If one is working, use it, Master it and own it. Just simple. It's working? Well, it's fine. If it's working, great, all right? Otherwise, there are so many things one can learn and too many trading systems, too many trading strategies out there. But one just need to pick one. Some traders use Fibonacci all the time, and that's what they do. Some traders use RSI all the time, that's all they do. Some traders use all the time stochastic or combine stochastic and MACD or something like that, that's all they do. But you want to find what is working for you and then stick to it, all right? Bang it, hammer it. That's why you want to work on, because it's working, hammer it, all right? Hammer it in, all right? That's it. Enough of my blah, 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 all right? Let's pause the video after 21 minutes, talking. I'm now in this trade. But before I pause the video for the first time to avoid that the video is too long, I'm going to set my stop loss, all right? I'm going to set my stop loss. I'm going to go quickly to the weekly chart to see the bigger picture one more time. You can see that the blue trend line here is the median line of the rising channel, So the S&P 500 is in a rising channel, which is the market pattern, but it's now retesting the median line. It's also at the intersection point between the neckline of the double bottom chart pattern and the median line. We are at a hot spot trading zone. All right, we are at a hot spot trading zone. So this blue line, which is the median line of the rising channel, we can see it. Pay attention to the blue line here. We can see it on the 2-hour time frame. All right, let's go. Let's go to, I will color this one into orange so you don't get confused. So we have only one. Here it is, the blue line. You will see it now on the 2-hour time frame because I want to set a target in case the price goes down fast. So here it is. You can see the blue line. Can you see? This is from the weekly chart. So I entered a trade at 20.98. The trend line is somewhere here. So you see the price went up from here all the way up here before we have the bearish divergence. I'm going to 2085, 2077. All right. Hold on, please, my friend. Good. That's not enough. 2080. That's not very good. Well. All right, my friend, I'll set my stop loss at 2077, I'll set my target, my profit target at 2077, which is a support level here. Bear with me. Exact number, 2077, I'm running out of color now. Orange horizontal line, green. No, we have green already. All right, use black. So that's my my target at 2077. 2077. All right. Now I enter the trade at 2098. My stop loss is, all right, at 2113, which is the red line up here, and my target is at 2077. Let's go back to the 3-minute time frame, and I'm going to, okay, pause the video for the first time. Let's remove my arrow, the arrow that is pointing the direction for the S&P 500. All right, okay, here we are now in this trend, okay, great. So let's place a vertical line there at the point where we are pausing the video, right there. So one candle at the side here, and color it in turquoise, and we will pause the video for the first time and come back to it to show you whether I have been kicked out or whether it's working beautifully, okay. So let's pause the video for the first time after 26 minutes of recording. So speak to you soon. Pausing the video for the first time. Okay, traders, we pause the video here where I place the vertical line, okay, and the S&P 500 since then went up to 2103, and now is coming back down, okay. So the price now above my entry point, so we'll give it more time, okay, so that, okay, it may go down more, all right? So this is just a quick update about what's happening with this live day trading. We are still in this trend, and the price went up, and now it's coming down. So this is what's happened, so we give it more time. And I will come back again to update you guys about what's happening with this, okay, S&P 500 live day trading. So speak to you soon. But before I pause the video for the second time, let's move my vertical line to the point where we are pausing the video. And the time in London is 35 minutes past 4 p.m. In New York, 35 minutes past 11 a.m. So pausing the video for the second time, and I will come back to it, okay, to update you about what's happening here. So speak to you soon. Pausing the video after 27 minutes recording for the second time. Okay, traders, let's continue. We pause the video right here where I placed the vertical line, and you can see that the price went down. After we pause it here, it went down below our entry point at 2098, and went back to retest that level, and now it's going down, which is good. All right, so we are in this trade, and it's working nicely now because we have a bit of rally here, but not much. But it went back below the entry, and it's now going down. Okay, and the time in London is now, okay, 1 minute to 7 p.m. In New York, 1 minute to 2 p.m. So the time today is the 21st of April 2016. And we will pause the video again for the third time because I don't want to close the trade yet because our target on the 2-hour time frame is okay. Let's go to the. I'll go to the 50-minute time frame. Yes, this is our target here at 2077. But I need to remind traders that the S&P 500 is quite slow. So we just give it more time to roll it down gently. Hopefully you get here today. But the most important thing that we have a winning trade, okay? So far so good. The setup was great, okay? And we enter the trade at 2098. We are using 15 pips, all right? And we set the target at 2077. So this is just a quick update about this live day trading, the S&P 500, using, okay, the Stochastic like a pro, all right? Let's pause the video again for the third time, and I will come back and show you, okay, what is happening here. The time in London is now 1 minute past 7 p.m. In New York, 1 minute past 2 p.m. Pausing the video for the third time after 29 minutes recording. Speak to you soon. Before we go, I want to change my time frame to 3-minute time frame. All right, that's where I want to be. And then we'll pause it now. Okay, let's pause it now. Going to okay, pause it now. All right. In fact, I'll go to I'll go to the 5-minute time frame so we can have enough room here. All right. Go back to the 10-minute time frame. No. All right. Now I'm on a 15-minute time frame, and my target is right here. Okay. Let's pause it again. Speak to. Okay, traders. The market is now closed. All right. So we pause the video here. And the price went down and then was consolidating here. As you can see, it's not much here because the S&P 500 does not go fast like the Dow Jones index. So was a profitable trade, but not a big one. So what can we say? All right. So the most important thing is not to lose. But as you can see, was not much today. On the 21st of April 2016, the price rallied up at the beginning of the market and then just went down, okay? And closed here bearishly. So it was a bearish day today. If you go on the daily chart, okay, so it has been a bearish day. But this is not a bigger move as such, all right? But the price now retesting the median line on the weekly chart. The trading setup is still in place, as we have seen it on the 2-hour time frame. All right, the bearish, okay, divergence, the bearish stochastic divergence, okay, was here. That was our trading setup. All right, it was taking place near a resistance level 2101, which is okay, the neckline of the double bottom chart pattern. On the weekly chart, here it is, double bottom. This is the neckline here at 2101. The price found a resistance there and it's coming back. Tomorrow is Friday. Friday very often. The market is not, okay, it's not about a real trading because traders are preparing for the weekend. So very often on Friday, one should be a little bit careful because you may see some trading setup like this, bearish, okay, divergence. And Friday, you may be expecting the price to go down, but the price may go up because it's not a real trading that we have, okay, on Fridays. Same thing, similar scenario on Monday, but we'll keep eyes on the S&P 500, all right? Probably you go up again tomorrow, and we'll see on Monday and Tuesday, probably on Tuesday, it will become clear, but the setup is still in place. And the most important thing is that the price still below the level of 2101, and we can give priority to bearish signal as long as the price fails to go above the neckline of the double bottom chart pattern, taking signal on the edge. All right. I hope you have learned something for this video also. All right. We'll put into use to make an excellent day trading and swing trading decisions. All right. We are the TSTW24 traders talking about okay, live day trading, the S&P 500, using the S&P, using okay, the stochastic indicators. Until the next time, enjoy yourself and be very happy. Speak to you soon.